display. There we go. Almost ready. And there we have it. Fade to black, and there it is. Alrighty. So, we're ready to roll. Sorry about that. Took me a while to get ready. I know. It takes me a while to get things rolling. Alrighty. Thank you. Alright, Gordon, we'll take a look at that a little bit later. See what I can do about that. Can't promise you anything at the moment. Hollywood's in the house. Dividend pays weekly. Barry, alrighty. Alright, YMAX. We're going to take a look at YMAX in a second. Give me a minute or two. Let me get some of these questions. Alright, thank you about that. I'm going to find header here. Thank you. A little strange, but alrighty. Is what it is. Let's see what some of these questions we have over here. Alright, questions. Hello. Wanachi, okay, whatever that is. Lily. Alright, Kate, we did that one already. Good evening. Hello. Yep, hi. I'm bricked up. I have no idea what that means. Chris wants to take a look at ExxonMobil. I'll write that one down. XOM, that's the first one on the list so far. Hello, Kitty. Is this a MAGA channel? No, this is Dividend Stock Talk, where we invest in dividend stocks for weekly cash flow. I don't do politics, but thank you for mentioning that. Margin calls. It's a revolution. Not quite sure if that's what it means. What's this guy's OF channel? That ain't going to happen either. Fine header here. Thank you. Does not intimidate me. Not a problem. IMAX pays weekly. Okay, Barry, we're going to take a look at IMAX. Okay, IMAX. We'll take a look at that one. Give you my opinion, because remember, Barry, you're relatively new here. I'm looking for something a little bit different than everybody else is looking for. Okay, I'm looking specifically for weekly cash flow. I'm not looking for capital appreciation. So if you're looking for me to give you a stock tip on a stock that's going to shoot up and make you all set for the rest of your life, yep, that ain't happening here. I'm looking for a simple, safe, predictable, consistent way of making 1% every single week. Now, I created a strategy for my 9-year-old daughter. We'll be talking about that a little bit more. Every week, I do go in and I do check how many different companies are available for us to invest in. I got some noise over here in the Zoom class. Who do we have over here? Well, we got a bunch of people here. Good evening. So Zoom user, no name. I got to mute you because you get noise in the background. Okay, Aaron, Andrew, Jim, Paul, all you guys, good evening. If you guys have a question over there in the Zoom class, just unmute yourself, ask the question. Just say, excuse me, James, I got a question. Okay? All right. So, let's keep on going. What's the weather report? It is lovely. Windows XP. What does that have to do with anything? Grandpa's computer problems stream. Yep, more than likely. Pepsi. KL or CL wants to take a look at Pepsi. CL, Pepsi, PEP. We'll take a gander at that one. People buy Ripple's XRP now, and you'll be kicking yourself later. All right. In the shadow of God. Cool beans. Lovely. Gary. Good evening, Gary. Most financial institutions will use XRP for all digital transaction by the end of the year. Okay. Gotta love it. Ooh, outlook on Apple. We're going to give you an outlook on Apple in a little bit. There we go. That works for me. Alrighty then. All right, so that being said, let's get the ball rolling and see what we're looking at tonight. First and foremost, every single week, we want to go over and see exactly how many stocks we have this week. All right, so that being said, let's go on over to the website. I personally like to use FinViz, Financial Visualizations, Finviz. There's one number I want to get off of here, and we'll take a look at that in a minute. Okay, Finviz. Right there. All right, so we're going to go over to Finviz and see financial visualizations. Gives you an idea of the whole market. I'm only looking for one number. Every single week, we start off the week with looking at this number right here. This is the number of stocks that are available for us to invest in here in the U.S. market. 10,046. Well, last week it was 10,043. The week before, 10,026. Well, we're up to 10,046 now. 10,046 different companies you can invest in. So how do we break it down? Well, simple. How many have a dividend? How many have options? By that should give you a good indication of what you're looking for. Well, we can look at the exchange, the market cap, the earnings, the price, any parameter you want to check. You can find it right on Financial Visualizations. Finviz.com. I use it once a week. That's about it. I don't use everything on it because it's doesn't have everything that I'm looking for. So that being said, we're going to remember that number. 10,046 different companies. We can choose any single one we want to invest in. Now, I don't know what you're looking for, but when I'm going to explain to you, when I'm going to show you what I'm looking for. Okay, I don't hide what I'm looking for. I tell you flat out. Okay, I have 7 accounts. I share 3 of them publicly. You can see every single trade that I make on 3 separate accounts. Okay, so I'm looking specifically. Simple, safe, predictable, consistent, and no way for me to lose. Now, I say this only because I created this trading strategy for my 9-year-old daughter back in 2008. I'm going to bring you up a video really quick for you to see her, give you an idea. Here's my website, The 10-Minute Trader. I'm going to go to the YouTube channel. This is all my, most of my social media. I got some more that's not even on there. But we're going to go to YouTube just to show you a video, okay, of the princess and how we got started. Okay, how this whole trading strategy started 15 years ago. Okay, so we're going to the 10-Minute Trader on YouTube. Okay, you can check and see how old the video page is. This page has been around for over 15 years. There's over 1,000 videos here. We're looking for videos, and we're looking for the oldest video. And there we go. There's the princess right there 12 years ago. Well, this is the one I want to show you right here. Everybody loves this one.
Hi, I'm JC, and
let me get out of the way so you can see.
Being part of my internet website called Thingy, which my dad doesn't like me calling it that, but I do. Being part of that, you're going to be getting weekly lists of stocks and all.
All right, this is me.
There's 21 days in the month of March. What does that mean? That means every single day you can buy a different stock. Every single day there's a different company.
It's my favorite part.
Seriously.
I crack myself up sometimes. So that was me 15 years ago. I had to make it fun. I had to make it exciting. Remember, she was only 9 years old when I first showed her. Okay, she sat on my lap. She said, "Daddy, what are you doing? Can you teach me?" So how do you teach a 9-year-old when most adults don't even understand it? Most adults can't figure it out themselves. So how do I come up with a trading strategy for a 9-year-old? Now, there's plenty of videos of her on YouTube. You can see. I love her dearly. She wasn't the sharpest knife in the drawer. You don't need to be. She was your average, normal, everyday little girl. Simple question. "Daddy, what are you doing? Can you teach me?" So it had to be simple. Remember, she's only 9 years old. Okay, it had to be safe. I didn't want her losing her money because she's going to cry. I'm going to feel like crap. Mom was going to get involved. I'm going to be sleeping on the couch. It's just going to be mayhem. No, thank you. Simple, safe. Predictable. Well, I want to make sure she knows what she's doing before she does it. We're going to do a few trades a little bit later, and you'll see exactly what I mean. Simple, safe, simple, safe, predictable, consistent. Okay, I want it to be consistent. I'm 61. I'm retired, which means I have to have money coming in from somewhere. Now, most people when they retire, they either have a pension or they're collecting Social Security. Well, I'm too young to collect Social Security. I mean, what am I going to wait? 5 or 7 years? Well, what am I going to do then? Go back to work? Yeah, no thank you. I've been working since 1973. Some of you weren't even born. That's when I had my first job, 1973. Old Man Simmons Farm. Right after school, we'd go to the farm and we'd do farm stuff. Okay, the last one. What is that? Number 4. Consistently, wait a minute, simple, safe, predictable, consistent. Simple, safe. Don't get old. It ain't that much fun. Simple, safe, predictable, consistent. No way for her to lose. That's the one. Number 5, no way for her to lose. What does that mean? Well, if she loses her money, yeah, she's going to feel bad. She's going to have mama get involved. I'm going to be sleeping on the couch. Yeah, that's not going to be a pretty thing. So it had to be simple, safe, predictable, consistent. No way for her to lose. Okay, so those are the 5 criteria that I had to overcome. Well, great. It took me a while to figure it out, but here you go. 5 rules to come along with a trading strategy specifically designed for a 9-year-old. So most of you people here in the audience are over the age of 9. So you should get it just like that, because it took a 9-year-old about 15 minutes to understand it. Okay? 15 minutes to understand it. Adults have a tendency to make things so complicated. All right, so here you go. Rule number 1. And this is a big one. Never buy something you don't want to hold on to. Well, if you don't like it, don't buy it. If it doesn't make sense, don't buy it. If you don't want to buy it and hold it for the rest of your life, hand it down to your kids and your grandkids, don't buy it. Never buy something you don't understand and you don't want to hold on to. Rule number 2. Never sell at a loss. It defeats the purpose of the whole game. And yes, it is a game. Don't let anyone kid yourself. Rule number 3. This is a good one. This one surprises the hell out of me every single night. Rule number 3. Make sure the company is consistently profitable. You would think that would be a no-brainer. Why would anybody invest in a company that's not consistently profitable? I laugh every night when people tell me these stocks and they say, well, this is a good one. Your idea of good, my idea of good, 2 different things. When I say consistently profitable, I'm looking for 2 decades of consistent profitability. That means if I go in and I look at the quarterly reports and the annual reports for the last 20 years, they're going to tell me this year they made more than last year. Last year, they made more than the year before. Well, the year before, they made more than the year before, so on and so forth, for 2 decades. Now, you may think that's a lot to ask for, but the stock market's been around for 400 years. Okay, there are companies here in the United States that have been trading their stocks for over 200 years. Yeah, and they still pay dividends. Yeah. Okay, that being said, rule number 4, weekly options only. When I say dividend investing for weekly cash flow, well, guess what? You need something, some way to have something to sell on a weekly basis. Now, I'm not buying and selling my stocks every week, but I am buying my stocks and selling covered calls, which is a stock option. So yeah, this is going to have something to do with stock options. Now, stock option is nothing more than an insurance policy. Okay, so you're getting an insurance policy in your favor to make sure things work out for you. Well, that's what I'm doing. I'm just going to show you how I do it. But remember, it was created for a 9-year-old. It's not that hard. Okay, rule number 5. Make sure all the numbers work. Now, we're going to do a couple of trades. We're going to look at a bunch of stocks. I'm going to try not to get bogged down with too much of the questions you guys have, because you guys always come up with more questions than I have answers for, and we're not actually looking at anything. Well, we want to look at stocks. Well, I want to look at stocks, and I'm sure some of you guys do. You want ideas. Like Barry here, he wants me to look at YMAX. Well, I can tell you right now, YMAX is a no for me. But I'm going to look at it anyway and explain to Barry why I think it's a no for me. Now, it may be great for Barry, because Barry has different goals than I do. But you know what my goals are. My goals are simple, safe, predictable, consistent, 1% every single week. And I live my life 1 week at a time. I'm not guaranteed next week. I'm not even guaranteed tomorrow. I may go to sleep tonight and not wake up. I don't know. Nobody knows. Okay, it's a wish and a prayer. That's it. Let's keep on moving. Paul Cleveland, how are you today? Let's roll. First stock on our list today is going to be, I hate to do this, YMAX. He was the first one to ask a question, so there you go. YMAX. Let's take a look and explain why YMAX is really not that great. Okay? Okay. YMAX. YMAX. Oh, there we go, right there. We don't have to go any further. Okay? Remember when I said rule number 4? Weekly options only? Because in order to collect weekly cash flow, you need something you can sell every single week. Or sit in front of a computer and looking for certain setups to be able to buy, sell all day long. Yeah, no thank you. If it doesn't have a weekly option, it's an automatic no. So Barry, YMAX, 20 June, 18 July, 17 October, 16 January. What does that tell you? Well, it tells me that these are months of the year, not weeklies. Okay, a weekly would look something to this effect. Okay? 30 May. Oh, that's this Friday. 6 June. That's next Friday. 13 June. Well, that's 2 Fridays out. 3 Fridays out. 4 Fridays out. 5 Fridays out. Every single week of the year. So you got a choice. Monthly option, trade it once a month. That's it, once a month. 12 times a year. So you're getting 12 checks a year plus the dividends. Well, I don't know. Because weekly options, that's 52. So ask yourself a question. Do you want 52 checks a year? Or do you want to get 12? Now, keep in mind, they're both about the same amount of money. Okay, so if I do a weekly option, I'm making 1 to 2%. If I do a monthly option, I'm making 1 to 2%. So let's do some quick math. Monthly options will give me roughly 12 to 24% a year. Well, some of you might think, hey, 12 to 24% is great. Not a problem. That works for you. For me, I want 1 to 2% every single week. Now that comes to 50% to 100% a year. And I know these numbers sound a little exaggerated for most of you because most of you are used to annual percentage rates. Buying something, and what do I get at the end of the year? Well, that's what you normally do. This is a color of a different horse. I wonder who knows where that phrase came from. That's a color of a different horse. Anyway, let's get started. YMAX is a no. And the reason it's a no, Barry, is I don't want to trade on a monthly basis. The numbers just don't work. So it's always a no. If it's a monthly optional stock, it's a no. Alrighty. AAPL. Lisa M. Good evening. I hope you're doing well. I'm doing awesome as usual. Cal, good evening. Daniel Berry, how are you doing tonight? I'm sure we'll take a look at UNH. I'll give you my opinion. AXP, we got that one already. Spin the camera around so we can see the class you are teaching. Oh, you want to spin the camera around? You ready? There you go. That's the class I'm teaching. I don't have a class. This is a podcast. I just come out here and just blurt out what I'm looking for. I'm actually, I forget who asked that question. Successful username. What I'm doing here is I'm creating a video log for my children and my grandchildren. So every night I come on and I tell them what I'm doing, what stocks I'm looking at this week, so on and so forth. I wave to them, say hi, and then I hope somewhere 5, 10, 15, 20, 30 years in the future, my children and my grandchildren can come back to these videos and say, hey, what did Papa G do? What did Papa G do in this situation? Because here's the thing. They don't know it yet. But The empire in which I am creating at the moment, I'm spending the next 20 to 30 years to create an empire, a financial empire for my children and my grandchildren. But here's the thing. They're not getting a single penny unless they understand exactly what Papa G did in order to make the money on a weekly basis. So, the trading strategy I'm about to teach you, my children and my grandchildren have to perfect this before they get any of their inheritance. I know that's mean, isn't it? Okay, so I never got anything from my parents or my grandparents. Okay, so I grew up in a very interesting scenario up in the 60s and 70s. That I didn't know I was dirt poor until the kids in school told me that I was dirt poor. So you're wearing the same sneakers you wore all week. Because I only had one pair. Okay? You're wearing the same shirt you wore yesterday. Yeah, because it wasn't dirty. And I don't in the same sneakers you wore all week. Because I only had one pair. Okay? You're wearing the same shirt you wore yesterday. Yeah, because it afford to wear. You know, it can't because you're on welfare and you can't afford it. Yeah, basically. And elementary school was great because nobody knew anything. Nobody knew any better in elementary school. But junior high, everybody hits teenagers. Yeah, you're wearing those same things. Yeah, okay, yeah. Anyway, so besides the point, I'm creating this video thing for my children and my grandchildren. You guys are along with the goal. The goal is simple. Simple, safe, predictable, consistent, 1% per week. I've been doing it for over the last 15 years. The video you saw of me and my daughter, that's when she was, I think she was 11 in that picture. Not video. Because the first 4 or 5 years, we didn't do videos. But we did a blog post in 2011. So, yeah, we traded for a couple of years, and then we did a blog post. Then a few years after that, then we did videos in 12, 13 years, whatever it was. But anyway, that's what I'm doing here. I'm creating a video documentary for my children, my grandchildren, if they want to collect their inheritance, which going to be freaking sizable. They're getting nothing until they can prove they are worthy of the money and they know what to do with it. So, yeah, there you go in a nutshell. That being said, let's start looking at some stocks, show you what I'm doing, and see if it makes sense. The number one question I want you to take away is, does it make sense? That's the big one. Does it make sense? It either does or it doesn't. Okay, so for me, Barry, WiMAX, no. Reason being, it's a monthly. I can't get weekly income from a monthly optional stock unless I want to sit in front of the computer and look at this all day. No. So the misconception you may have of me, do I sit in front of my computer all day? No, I don't. Because I just turned on my computer wait a minute, no, I didn't. I turned it on earlier because I was looking for something. But for the most part, when I sign out on Friday afternoon, I don't really look at my accounts until Sunday night. Well, there was no trading on Monday, so there's no sense of doing anything. Anyway, here we are. Let's just get going. Right? That's enough of that jibber jabber, right? Enough jibber jabber. Let's do some trading. All right, first, what else we have over here? Tornado watch and warning. What kind of trader are you? I'm a weekly trader. Chris, we are going to look at ExxonMobil. Great thoughts and thinking, thank you. Wayne, you say you are doing your usual process and you've been receiving returns weekly from... No, I don't do NVIDIA, dude. Okay? I never ever said I do NVIDIA. But after some time, it stops producing 1%. Do you hang on to it on the end of the week or are you out? Okay, so Wayne, basically, whenever I buy a stock, okay, I sell a covered call against it every single week. I want weekly cash flow out of every single position that I have. At some point, they go up to a certain point where it doesn't make sense to hold on to it anymore. Take the profit, move on. Stocks do two things and only two things. If you're expecting a stock to come to your house, take the dog for a walk, ain't going to happen. Okay? So stock is not going to come to your house, wash your dishes, serve you dinner, make your bed. No. Stocks go up, stocks go down, that's it. When the stock goes up, you should be selling it. When it comes back down, that's when you should be buying it. Okay? You buy low and you sell high. You've heard that many, many times, and it's still true today. Now, I will buy a stock. If it goes down, I'll hold on to it and keep selling covered calls. If it goes up, it goes to a certain point where you can't, it's not profitable to hold on to it anymore. I did it with, what did I do with it? I did it with US Steel a couple of weeks ago, and I did it with Alcoa, I think it was 2 weeks ago. Because it gets to a certain point where rolling it forward, you're not making a full 1%. The stock's still going up, but you're not creating any cash flow. So and I'm not looking for capital appreciation. I'm not looking to buy a stock here, wait for it to go up. No, I, retired, need weekly cash flow. Plain and simple. My bills come due every week. Every week I get a bill. Okay, either for the electric bill, either for the water bill, either the mortgage, the insurance, anything, something every week. So I need to be, now once you get my age, you know what it is. Okay, yeah, the mortgage is due here. The insurance is due once a year, it's the state. This is due here at the state, blah, blah, blah. We know these things once we get to this point. So at this point in my life, I know what my bills are. I know when they're coming due. So monthly does not work for me. Quarterly does not work for me. Annual definitely does not work for me. Weekly cash flow works fine. Okay? I entered the workforce back in the 70s. Okay, we went to work at 8 a.m. in the morning. We came home from work right around 5. Well, it's basically the same thing. Stock market opens at 9:30. Well, I'm online at 9, looking where my positions are and what's going to happen as soon as the market opens. Enough of this jibber jabber. Let's get in. Let's take a look. Next one on the list is going to be ExxonMobil. All right, let's pull it up. XOM. And I'm going to point out exactly what I'm looking for. Okay, anytime I pull up a chart, always the 1 year chart first. Always. And I'm looking for 5 things. You ready? And it's simple. 3 to 4 seconds. You should be able to find it. High, low, was, is. Look at this. Up, down, up, down, up, down. Okay? Simple, right? Up, down, up, down. It's not that hard. Okay? Up, down, up, down, up, down. Okay, fine. If I'm going to buy it tomorrow, I want to know what are the numbers. Remember rule number 5? Make sure all the numbers work. Well, here are the numbers. Okay, what am I buying it for? The last traded price on Friday, 103.03. That's the current price right there, 103.03. So what's the closest stock price? Well, we want to look at this week, because this week is going to be the week of the 30th. Okay, May 30th, right there. Okay, first thing I want to look at, what am I buying it for? 103.03. Well, the 103 is going for 141. What does that mean? Okay, if I buy the stock at 103.03, I'm going to sell it to someone else anytime between now and Friday morning. Oh, sorry, Friday afternoon, right there at 4 o'clock. That's when the market closes. 4 p.m. Friday afternoon. So when I buy the stock tomorrow morning, this is the price hypothetically I'm paying. Because all these numbers are going to change first thing tomorrow morning as soon as the market opens. But we can use these numbers here right now to give us an idea of what we're looking for and what we're doing. Because as of Friday, these were the numbers. But one thing that doesn't change, who do we have over here? Rizzo, dude, how are you doing? Alrighty. What doesn't change is the mathematical equation. What am I buying it for? What am I selling for? What premium am I collecting? What percentage is that? Well, I'm looking for 1%, and I'm going to show you exactly how I do that. Okay, 103. 1% of 103, $103. 1% of $103 is $1.03. You just move the decimal point over. That's it. That's 1%. It's actually that easy. So if I buy it here, I sell this one, what am I collecting? I'm collecting 141. Now, do I care if the stock goes up? No. Do I care if the stock goes down? Not really. What am I looking for? I'm looking to collect 1% on a stock that I like. Remember rule 1? Never buy something you don't like or you don't understand or you don't want to hold to for the rest of your life. Well, that's the first question. Number 1. Never buy something you don't want to hold on to. So if you don't like, I forgot what it was, ExxonMobil. If you don't like ExxonMobil, then don't buy it. It's actually that simple. But if you are going to buy it and you do like it, well, do the numbers work? Is it the right time to buy? Well, we're going to take a look at all those in a second. But those are the questions you need to ask yourself. The number 1 question always is, Does it make sense? Is what I'm saying making sense? That's number one. Number two, do I like this stock? It's ExxonMobil. Well, we all know who ExxonMobil is. Well, it's a fair question. Do I like it? Does it make sense? Do I like it? Well, question number three, do I like it at this current price? Okay, and then question number four, am I willing to buy it, hold it for the rest of my life, sell a covered call every single week, collect a premium, 1% or more every single week, till the day I die, or until it hits my target price? Well, what's my target price? Think about it. If I'm buying it at 103.03 and I'm selling it for 103, what's my target price? It's 103. If I buy it, collect this, and it hits my 103 by this Friday, well, Monday, I get all my money back and I get to pick another stock and get another 1%. If not, I will do next week, which is right here, 6th of June. And I will do again the 103s. Every single week, I want some type of cash flow coming in from every single stock that I own. So if I have 6 stocks, well, I want to get 6 little dividend checks, or 6 little option premium checks every single week. That's what I want. So let's do a few. So ExxonMobil, the numbers look good. First thing we want to look at the chart. 5 things: high, low, where was it, where is it, where's it going? Okay, that's the first thing we want to look at, the 1-year chart. Second thing we want to look at, the numbers. What am I buying it for? What strike price am I selling? What am I collecting? Is that more than 1%? Well, in this case, it is. So let's move forward with an example using ExxonMobil at 103. Well, because the price is 103.03. Kind of makes sense, right? So let's take a look. So let's move this back over this way because we don't need to see it. We don't need to see all those. Yeah, right there. Now, let's go through the numbers on the chart. And what is the chart telling me? Because every chart, Rod Stewart in the 70s, every picture tells a story, don't it? I don't know if you guys remember that one, but Rod Stewart, every picture tells a story. High, low, was, is, look at the motion. Up, down, up, down, up, down, easy to see. Remember, it was created for a 9-year-old. Don't make it more complicated than it needs to be. Now, I'm 61. I created it over 15 years ago for my 9-year-old when she was 9. She's not 9 anymore, but it's not the point. When she was 9, it had to be simple, safe, predictable, all that stuff. Adults, you people have a tendency to make this more complicated than it needs to be. So, when it comes to the chart, high, low, was, is, all that stuff, I want to look at 4 charts. First one is the 1 year. That tells me whether or not it is worthy for me to spend time looking at the numbers. Well, this is a yes, so let's continue to step number 3. First step, the 1 year chart. Second step, do the numbers work. Step number 3, we're actually going to dissect the chart to see if it's right for us this coming week. All right. A year ago, we're right around 114. The high of the year is 126. 126.34, and that was the second week of October last year. Well, look at your last 90 days. Now, the reason why I want to look at the last 90 days, okay, the last 90 days, the last 3 months, okay, 3 months ago. High, low, was, is. Here it gives me a better representation of what me and you, the other investors, because as you can see here, 12 million shares traded last Friday. So, more than likely, there's going to be another 8, 10, 15, 20 million shares trading on tomorrow. So, the last 90 days or the last 3 months gives me an idea of what is the pattern there. We'll take a look. Up, down, up, down, up, down, up, down, up, down. Where is it here? Look at this, right there. That looks like Thursday was the bottom and Friday was higher. So that's 1 day to the upside. Now, could that be the new bottom? Don't know. Well, let's zoom in a little closer. Now, that's the 3 month. Well, now I want to look at the 1 month, or 30 days. So the last 30 days, okay, 30 days ago, here we are. Okay, up, down, up, down. Now it's turning right here. Now, here's something you might want to keep in mind, or remember. It's not that difficult to remember. Every 30 days. Okay, that's usually 30 days in a month, usually. Okay, there's only one 30-day high and only one 30-day bottom. Okay, 30-day high right there, 30-day bottom right there. Well, you've heard it over and over and over again. Buy low, sell high. Well, just to let you know, in case you didn't obviously see it, Thursday was the 30-day bottom. You cannot get any lower than the bottom. And that was Thursday. Friday was higher. Okay, so what happened? Well, logically, okay, think of this like a child would think of it. Stocks go up, stocks go down. Stocks go up, stocks go down. Stocks go up. So here is the top. Now it's coming down. What causes that? Well, that's called profit taking. Some people want to call it retracement. Some people want to call it a correction. You can call it whatever you want. But the way I look at it, here's the previous bottom, okay? One bottom here. Here's the previous bottom right there. Now, if I'm going to take a look at this, the previous bottom's right here at 103. Well, from the 103, it jumped up to 111. So from 103 to 111, that is an $8 move. An $8 move on a $100 stock was right around 8%. Somewhere that area. That's an 8% move. Now, I'll take profits at 2 or 3 or 4%. Well, this is 8%. So, profit taking. Anytime you have profit taking, stocks have a tendency to come down. And when it comes down, went from 111 down to almost 101, that's a $10 move. Well, a $10 move on a $110 stock is right around 9.8%, something like that. Well, that's a big move, like almost 10%. Well, yeah, bottom's Thursday, now she's going to go back up. Is that guaranteed? No, it's not guaranteed. It's like a seesaw, a teeter-totter. You know, you played it in the playground, up, down, same thing. Stocks do the same thing, up, down, same thing. So what's happening here? Here's the top, here's the bottom, starting to turn to go back up. Is that true? Is that accurate? Well, only time will tell. I like 2 days to the upside. Well, we had one on Friday. Tomorrow could be the second one, which would mean I would jump in on Wednesday. For me. Now, some of you guys might think, hey, this is the bottom. If she's higher on Monday, I'll buy it. Well, that's you. Okay, me, I like 2 days to the upside. On the third day, I jump in. See, bottom here, 1 day to the upside, 2 days to the upside. Day number 3, that's where I jump in. Because day number 3 is higher than day number 2, and it's the third day to the upside. I would jump in first thing in the morning and take that ride. Well, here you go. Here's the bottom. 1, tomorrow will be day number 2. Wednesday would be the earliest I would get into it. I have certain rules, and I stick to them. And here's my reasoning why I stick to my rules. Drazik, holy cow, dude. Twice in a week. Holy. Anyway, nice to see you. As I was saying, I am 61. I could go back to work if I wanted to. But I don't. I've been working since 73. I should be able to retire if I have enough money and if I want to. Okay? But to be 100% honest with you, if I didn't make 1% every single week, and I did stick to the normal, 4% draw, you work 40, 50, 60 years of your life, and then you get a 4% draw for the rest of your life, yeah, I'd still be working. However much money you think I have, I don't. Okay? Okay, I show you all my trades. You guys know exactly what I have to work with. So that being said, let's progress to the next one. So everything looks good for ExxonMobil, so we're going to do a practice one. Remember, I told you we're going to do a practice trade to show you how it works. And then we'll check the numbers, and you will see for yourself that answer to question number 1. Does it make sense? Well, let's check it out. ExxonMobil, the numbers all look good. Okay, all these numbers look good. The chart looks fine. Well, let's take a look at one more chart. Now, when I first started trading, this chart didn't exist. But nowadays, it does. It is called a seasonality chart. Now, for those you don't know what a seasonality chart is, let me briefly explain it really quick. Seasonality chart is basically using the calendar to chart or get an idea of when a stock moves predictably. Well, winter, spring, summer, fall, they come every single year. Now, ever since you were a child, you knew spring came after winter. Summer came after spring. We know all these things. Well, take a look. This chart here is a one-year chart. To the left, January 1st, all the way to the right, December 31st. That's the whole year. The blue line represents this year. Okay, January 1st. This blue dot right here is Friday. Okay, that was the last trade, Friday. This red line here represents 10 years of information. So that's 2015, 2016, 2017, 2018, 2019, so on and so forth. All averaged out. What does a stock normally do? Well, look at where we are right now, that little blue dot. Well, look at this area here. This is what I want to look at. I want to zoom in and see based on historical performance. Because the way I look at it, if a stock or company has been doing the exact same thing year after year after year after year. Now, ExxonMobil's been around for decades, okay? And they're consistently profitable. Well, look at it. Right here, what are they going to do? They're going to go sideways for a bit, and then they're going to go up. Well, that works for me. Yeah, so let's move on to the last step and actually do a covered call on ExxonMobil so you see how it works and does it make money. Well, we already decided we're going to do the 103s. We're not going to do this one. We're going to do this week's. We're going to change right here. Now, I use Thinkorswim. This is a trading platform. It's not a piece of software that I invented. I get no money out of this whatsoever. Okay, so yeah, I tell people download it and use it. It's free to download. And yeah, at some point, you're going to have to call Charles Schwab and say, hey, I would like to use your trading platform. Okay, so here are all the different trading strategies. I'm only going to share one with you. Okay, I have to draw the line somewhere. I can't share everything. I'll be here for days trying to explain all this. No, simple, safe, predictable, consistent 1% per week is a simple trading strategy. It's one of the easiest ones there, and it makes about anywhere between, I don't know, 26 to 100% per year. I'm looking for 50%. 1% a week, 50% a year. That's what I'm looking for. Now, granted, I do usually make more than that, but that's my goal. All right? So we're going to do covered call right here. It's a simple trade. Here we go. Now, remember I said I want the 103s? Okay, here are the strike prices here. 101, 102, 103, 104, 105. I'm buying it at 103.03. Okay, we've already decided that's the number right there. 103.03. The 103 is going for this amount right there. So I'm going to buy that. And this is going to pop up. Now, I have mine preset to do 1,000 shares. I'm going to pull it back a little bit just to show you one contract. Not what I do, but one contract. That way you have an idea. It's like, all right, if I have this much money, I can do 4 contracts. I get this much money, I can do 22 contracts. I'm doing one to show you what one would be. And then remember that class in Mrs. Smith's math class in 7th grade where they went over algebra and how you're going to use it when you get older? Here you go. Has to do with algebra. If one contract is giving me this, well, I have this much money. I can do 4 contracts. Okay? Yeah, you should have paid attention. Should have paid attention in math class. All right, so let's take a gander. And here is the trade. Here's what it sounds like. Now, I always tell people, read it out loud because most people are going to lose money by hitting the wrong button. Every week I hear a story. I hit the wrong button. Ah, damn it, I hit the wrong button. Now, I'm going to admit, I've hit the wrong button plenty of times. As a matter of fact, I was doing a live trading class, and everybody watched me hit the wrong button. And I lost, I think it was $2,500 by hitting that wrong damn button. Nobody blamed but myself. I always tell people, read it out loud to make sure what you're doing is what you want to do. Now, you may think to yourself, I know there's a couple of you out there thinking, yeah, I'm not going to hit the wrong button. Yeah, you will. I've been trading for over 20 years. I hit the wrong button at least once or twice a year. But I'm going to tell you this one thing, and this is extremely important. Anytime you hit the wrong button, as immediately as you find out, it's got to be immediately. You can't wait a couple of minutes. You immediately pick up the phone, call your broker, and say, hey, I made a mistake. Can you reverse it? They will reverse it if it's been like 5, 10, 15, 20 seconds. Okay? If you can call fast enough. If you call 10, 15, 20 minutes later, forget it. That ain't going to happen. It has to be immediate. And every time you call, your phone call is time stamped. So if you're sitting on the phone waiting for 15, 20 minutes, don't hang up. Because you'll be putting right back into the queue and you'll be 15 minutes late. No. Because they can tell exactly what time you called. If you make a mistake, call them immediately. All right. ExxonMobil. Buy one covered call ExxonMobil, XOM, weekly. 30 May 25. Well, 30 May 25 is this coming Friday. The 103 call option. Remember we talked about that? If I'm buying it at 103, I want to sell it at 103. The 103 call option against the stock, XOM, to open to open. Now the reason why it says to open is you're doing two trades at once. You're buying the stock and you're selling the option. Think of it this way. Stocks are traded in New York. Options are traded in Chicago. So it's two trades. You're making two phone calls. One to Chicago, one to New York. You're not making them, but you know what I mean. Okay. Anyway, let's keep on going. Do you see this right here? Maximum profit. Do you remember the part where I said simple? A covered call is one of the simplest trading strategies it is. Remember I said safe? Well, one of the safest trading strategy is the covered call. It is so safe. As a matter of fact, they allow you to do covered calls in your retirement account. Some trades you cannot do in a retirement account, but a covered call, you can. Number 3. What was I saying? Oh, simple, safe, predictable. Remember I said predictable? Well, I know exactly how much I'm going to make before I even do it. Now, when you buy a stock, you have no idea what your profit is. You have an idea of what you'd like your profit to be, usually. But a covered call, you know exactly what your profit's going to be before you even do it. And you know how much you're risking in order to do it. All right, so remember, simple, safe, predictable, consistent. Now, when I said consistent, remember this over here? 30 May, 6 June, 13 June, so on and so forth. I can do this trade every single week until I hit my target. Think about it. If I buy it at 103, I can sell somebody the right, not the obligation, premium. Well, this particular week, today, these are the numbers. Tomorrow morning, the numbers are all going to change. Just do a simple math. What am I buying it for? What am I selling it for? It says maximum profit $139.50. Okay, well, how much is one contract costing me? Cost of the trade, including commissions and fees, $10,100. So I got to go here, and then I got to go to calculator, and the calculator's there. Bring it over to here. Here we go. Okay, so I'm going to take the $139.50, and I'm going to divide it, because that's the profit. You take the profit and you divide it by what did it cost? Well, it cost $10,161. $10,161. Here we go. 1.3%. Okay, 1.37%. Sorry, almost 1.4. That's every week. Imagine getting 1% or 1.3% every single week. There's 52 weeks in the year. Okay, now you are going to have to do some work. Okay, so look at it this way. This is the way I look at it. Okay? I got a fish tank. I got fish in it. Every day, I got to feed the fish. Every day, I got to make sure the pump is working properly. Every day, I got to make sure the lights are working properly. Every day, I got to make sure I have enough fish food. Every day, there's certain things I need to do because I like my fish. Now, when I had, I still have them, but they don't live with me anymore. When I had my young children, okay, I would stay home with the kids. The wife would go to work. Then she'd come home, and then I would go to work because we had our own business. But here's the thing. She would go to work first thing in the morning, and I'd take care of the kids. Get them fed, get them off to school, blah, 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 all that kind of nice, neat, fun stuff. You got to feed them, and you got to water them every single day. Well, why aren't you doing it with your money? Because guess what? Children leave. You're all alone. Pets come and go. They die. I mean, I don't want to be gruesome, but it is. It is what it is. So eventually, at some point in your life, you're going to be all alone. Okay? It's called empty nest syndrome. And you're retired. Oh, what are you going to do? Well, if you don't take care of your money now, what makes you think you're going to do it when you're older? Okay? Most people spend more time planning a barbecue than they do with their personal finances. Okay? So for me, okay, Monday through Friday, I spend 10 or 15 minutes with my personal finances. I get up in the morning, I check, well, what did I buy this for? What did I sell it for? Where's it at now? What does that mean? And it only takes a couple of minutes. It's called the 10-minute trader for a reason. Okay, I can look at ExxonMobil and say, all right, what did I buy it for? 103.03. What strike price did I sell? The 103. What did I collect? 139 per contract. What did that come to? Came to this. What does that mean? Blah, 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 blah. You know, all that stuff. You do it every single day. It takes 5 or 10 minutes. Well, think about this for a second. If you spend 10 or 15 minutes, or even 5 or 10, 15 minutes every single day, what does that come to? About an hour? About an hour a week? Now, if, hypothetically speaking, if, let's say you got $50,000 in your account, well, 1% of 50,000 is $500. So here's the question. Working 15 minutes a day, just to take a look at your account. Well, ExxonMobil, what did I get at? 103. What did I sell? 103. What's that at now? 103. Okay? Simple, simple, simple. Every single day. 1 hour a week. 1%. If you got a $50,000 account, that's $500 an hour. If you have a $100,000 account, that's $1,000 an hour for 1 hour of your time. Most people spend more time planning a barbecue than they do with their own personal finances. Why? It boggles my mind. Take care of your money will take care of you when you're older. Anyway, let's go to the next one. CME. Wait. CME. Is CME Chipotle? I think it might be CME. CME. All right. Dive Bandit. GameStop. Okay. Moas tomorrow. I'm 20, broke, and know how to trade after 6 years of and everyone around me. Alrighty. Dive Bandit. 100% agree. NDLS. What the heck is NDLS? NDLS. Now, Dive Bandit, you've been here for a while. You heard what I said. Okay? Now, you honestly think NDLS is going to fit the criteria I'm looking for? Living the Dream. Just joined topic on trading. Investing for a weekly cash flow using a simple, safe, predictable, consistent 1% per week strategy that allows me to collect 1% every week, which is over 50% per year, using nothing but pre-qualified dividend stocks. Got it? All right. Koya. Okay. Sorry, I'm new here. Can you a little bit of knowledge on how to spot a valid order block, please? Okay, I'm not quite sure what a valid order block is. What's my thoughts on UPS? We'll put UPS down. We'll take a gander at it. I love UPS. It is on my list. Hello, Ben. How are you? All right, so let's keep on moving a little bit. MJF, covered calls, absolutely. MJ, So, you doing covered calls on weeklies? Absolutely. Rias, good evening. Harry, ooh, Suncor, SU, all right. Bobby G, I'm guessing your favorite time frame is 10 minutes. Absolutely not. My favorite time frame is 1 day. I trade 1 day at a time. That's it. What stock is that? Well, that is ExxonMobil. Blockchain Bullhorn. Thank you, Jessica. Good evening. Jessica. John, good evening. Tripwire, good evening. Oh, 14 million of inventory. One of the most boring streams. Yet this is like the 4th or 5th time you've been here. Amazing. Is it over 200,000? Maybe. Okay. Hey, y'all. Inventory, go make your own. That works for me. Do you have your own fund? Okay, 4XAK. I am working on my own fund. It's a little bit more complicated than most people have a tendency to believe. Bro, talk a lot, but saying nothing. Mr. Wales, thank you for that. I love positive people. You invented Thinkorswim? No. Tom Sosnas did. Why Bloomberg have color-coded keyboards? No idea. You can do a covered call with your Roth IRA. Absolutely you can. What is the best strike price for Riley this week? Ooh, Quantum wants to take a look at Riley. Hold that thought. I actually have Riley in like 4 or 5 different accounts, different strike prices. All right, do you provide a list of stocks that you look at and would add to your portfolio? Absolutely. What's a good company to start with? Oh, Living the Dream. 3A Chest. General Electric. We'll take a look at that one. I love General Electric. It is on my list. Why don't you use AI to help organize? Because I'm old school. Okay, I've seen enough Terminator movies, and I did see 2001: A Space Odyssey. Yeah, no thank you. I'll do things on my own. Okay, I've been doing fine for the last 15 years, and I don't think AI is going to change what I do. Awful on messages. Won't say more than 1 word. Oh, Wildcat, how are you doing? Okay, Wildcat, you're under the impression that you send me a message and you're the only one on the planet sending me a message. I get 7 different channels and I get hundreds upon hundreds of people to deal with on a daily basis. You ask me a stupid one word question, I'm going to give you a 1-word answer. Plain and simple. You don't like it? Ask a better question. Okay? Okay, your life is basically equal to the quality of the questions you ask. You ask me a 1-word answer question, well, you're going to get a 1-word answer. Plain and simple. Karen, good evening. Funny video, good evening. It could make it better. Okay, see, here's the thing, Dive Bandit. Okay, I love the idea of making things better. But I grew up in a time where if it ain't broke, don't fix it. If it's working fine, leave it alone. Okay? That's where I grew up. You want to do what you want to do? Be my guest. What do you have a problem with? I have a problem with a lot of things. Fry 'em. Okay, let's keep on going. Danny, thank you. Malik, thank you. Can you do all of this on the Acorn app? So, James, to be 100% honest with you, I haven't used the Acorn app. Okay? I use Thinkorswim through Charles Schwab, and I also use Robinhood. So, if I do it on Robinhood, you could probably do it on Acorn. Chris, how do you limit your purchases? All right, simple, Chris. If I have $100,000 in my account, okay, I will do 5 positions. 20,000, 20,000, 20,000, 20,000. That's how I limit it. Ben said, hello, what is your thoughts on UPS? We're going to take a look at UPS in a little bit. LHX is top stock for Trump's Golden Dome. I've never heard of LHX. So I've been doing this for over 20 years. I'm pretty good at who's who. LHX, I never heard of them. Captain Obvious, back again. Nice to see you. there's always someone in the crowd asking about Misty. Yeah, I don't do Misty, because remember the part where I said, okay, and Rob, you too, and PH2K20. Now, all three of you apparently weren't listening. When I say 2 decades, that's 20 years of consistent profitability. Misty doesn't fit, neither does O-Realty, and neither does XRP. 2 decades, that's 20 years, consistent profitability. Okay, XRP, no. O-Realty, no. MSTY, no. What is wrong number button called? The one not to hit. All right, think about it this way. X, you're used to doing things a certain way. That's just all there is to it. If you've been doing this long enough, okay, you know what buttons to hit, what buttons not to hit. If this is new to you, you are going to hit the wrong button sooner or later. Bo wants to take a look at Mark, MRK. Give me a second. MRK. Dive Bandit. Why do people hate Robinhood so much? I think it's awesome. I like Robinhood. What do you think about Tesla? Nope. And what Elon Musk is doing in general. Don't get me wrong. Love Elon Musk. I love Tesla. I don't trade it. Doesn't have any dividends. It's a no. Blake. Did you see my question I posted on one of your last videos? You saw the price run up on a stock and it was likely going to be in the money, but you said you would deal with it first thing in the morning. If it's taken, let me think. Advanced Auto Parts. Advanced Auto Parts doubled in price overnight. Yep. Doubled in price overnight. So there's nothing you can do after 4 p.m. Nothing. You have to wait for the morning. So the very next morning, I went in and I looked at it, and yeah, it did double in price. And yeah, I was susceptible of being called out, and if I was being called out, I was going to lose money. So I did not want that to happen. So what I did is I took it and I rolled it into the next week. Okay, it means you buy back the option and you sell the next current option, and you make another profit, and then you reset the time clock, so to speak. So yeah, I did see that question, and I did answer it. What did you mean by what did you do? What did I mean by what did I do? Well, I bought the option that I sold, because anytime you sell something, you always have the opportunity to buy it back. Okay, if you buy something, you have the opportunity to turn around and sell it. If you sell something, you have the opportunity to go back in and rebuy it. So I bought it, and then I sold the next covered call out. Okay, so I didn't lose any money. If I didn't do something, I would have lost money. So I had to do something, and what I chose to do was roll it forward into another week. LHX. L3 Harris. Still, never heard of it. Living the Dream. Sir, you have been questioning XRP also. Yeah, XRP doesn't pay dividends, and XRP has not been around for 20 years. So XRP is a no. Simple. If it ain't broke, don't fix it. Absolutely, Wayne. Okay, I'm strange that way. I'll have a car, and I will drive a car until it dies. And if I can't fix it, then I'll get rid of it. Okay, I got a car that's over 26 years old. I get in, start it up, it still works. There's no reason for me to get a new one. If it ain't broke, don't fix it. Ooh, Walmart, long term. Ooh, chicken strips. Travis, I have no idea what that means. Walmart, WMT. We'll take a look at that one. Wobbly, lively comments tonight. Yeah, I know. Okay, you guys gotta stop with the comments so I can start looking at stuff. MRK, Wally World. Can you add CL? Yeah, Colgate Palmolive. Gotta love it. If you need any inside information on UPS, nope. Chicken stripes, chicken nuggets, HY. Link in the bio. Nice. Awesome. Chicken cutlets. Okay, Travis. I love people that are just pointless and do shit. There we go. Rob, what's wrong with Realty Income Corp? It's a monthly dividend stock. Just curious. All right, Rob, what I'm going to do for you, because you're new here, and apparently, no, don't take it personally, Rob, but when I say the numbers just don't work on monthly optionable stocks. I'm going to point out to you why. Tumbleweed Bang Boom, SCHD, I'm going to tell you the same thing. SCHD. Okay, SCHD. All right. WOA. Humana. Oracle. ORCL. Oracle. Humana. And Dollar General. All right, enough. That's enough. That's like 20. 20. We're not going to get to all of them. Okay, Rob, we are going to go over what's wrong with O Realty. Okay, so Rob, what I'm looking for specifically, okay, understand this. What I'm looking for specifically, simple, safe, predictable, consistent, 1% per week. And it has to be a company that is consistently profitable and has weekly options. Okay? O Realty doesn't have weekly options. O Realty is consistently profitable. IMAX. IMAX. Why the hell are we looking at IMAX? I got to bring this all the way back to the beginning, to where we were, and we're going to pull up IMAX. IMAX. That's why we don't do IMAX. Monthly. 20 June, 18 July, 19 September, 19 December. Okay, so when I say monthly options just don't work, can you do same with vertical calls? Yes, but I'm not showing vertical calls here. Okay, I already said that. Dive Bandit. I use Bollinger Bands and reverse psychology with MACD and Copoc to confirm my bias. Nice and simple. I'm going to teach it to my little sister. Well, Dive Bandit, that's awesome. But I tell you what, once you start explaining Bollinger Bands, you're going to have to start explaining the Fibonacci curves and the Fibonacci numbers and a whole bunch of other stuff that goes along with it. Have fun with it. Okay? For a 9-year-old, it had to be simple, safe, predictable, consistent, all that fun stuff, no way for her to lose, and something she can do in less than 5 to 10 minutes. JEPQ, oh my goodness. What's my name? Oh my goodness, you're coming to my website and you're asking me what my name is? Really? JEPQ. JEPQ. Okay, so who just asked about JEPQ? Tumbleweed, another one. TikTok. Oh, it'd be The 10-Minute Trader and Dividend Stock Talk. Okay, you got to be careful though, because there's like 30 people pretending to be me. This is just covered calls. Yeah, what did you want it to be? And think about it. What did you want it to be? I'm looking for a simple, safe, predictable, consistent 1% per week. Do you know another trading strategy that I can do in less than 10 minutes that will make me 50% per year or more? I'm curious. WOA. At IMAX, no. It's not a weekly. Remember I said rule number 4? Okay. Rule number 3 was consistency of profitability. Okay, so Tumbleweed. Rule 3, consistency of profitability. SCHD, JEPQ, and as a whole. And you're biting. And you're buying that crap. When I say 2 decades of consistent profitability, SCHD doesn't have it. JEPQ doesn't have it. O Realty doesn't have it. Okay? There's a lot of stocks that don't have it. Remember when I say, wait a minute, consistently profitable? That was Rule 3. Rule 3, make sure the company's consistently profitable. Well, you missed that part. SCHD doesn't do it, neither does JEPQ. So, next on the list here, Pepsi. Pepsi, the company's over 100 years old. They consistently increased their dividends for more than 5 decades. That means they're consistently profitable. Okay, but look at the chart. Here's the high, here's the low, here's where it was, here's where it is. We're looking for the new bottom. Now, we've been looking for the bottom on Pepsi for quite a while. We thought it was last week, but no, it's still going down. So let's zoom in a little bit closer, because we're going to say no to Pepsi this week. But we are going to keep our eye on it. Because look at this, it keeps dropping and dropping and dropping. We thought this was it right here. Okay, 1 day up, 2 days up. So it's 2 days to the upside. So I'm ready to jump in on a third day. Well, the third day, right there. Yeah, no. And it's coming back down again. New bottom Friday. So, Pepsi, not this week, might be next week as soon as we find a bottom and she turns around, moves back up. So I'm going to write Pepsi down for next week. Okay. Next on the list, American Express. Love American Express. Another company that's consistently profitable. American Express. High, low, where was it? Where is it? Look at the motion. Up, down, up, down. This is going to be a no only because it's coming off of that profit. Okay. Here's your 30-day bottom. Remember we said 30-day bottom, stocks go up. 30-day top, stocks come down. Well, it's coming down. Looking for a new bottom for AXP. We'll write that one down next week. Apple. Ooh, gotta love Apple. Now, Apple is not on my list, but I do trade Apple. And you want to know why I trade Apple? Because Apple is on Warren Buffett's list. I trade 5 lists. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, and Warren Buffett's list. Apple's on Warren Buffett's list. Well, let's take a look at the numbers. High, low, was, is. Look at the motion. Up, sideways, up, down, up, sideways. 195, it's coming down right now. Let's zoom in a little closer. Okay, look at your last 30 days. Up, down, up, down. It didn't even gap down. Now, don't get me wrong, I love Apple. As soon as Apple finds a bottom here, turns around, goes back up, I'll jump in on it. But not this week. So we'll put Apple down for next week. Okay? Now remember, 2 days to the upside, and on the third day, I'd be jumping in. So tomorrow, if tomorrow, more than likely, will be up, you got a gap down here. Okay? If she jumps up tomorrow, well, that's 1 day. 2 days would be Wednesday. Thursday would be the third day I might jump in on Apple, if we can find a bottom. See here? 1 day, 2 day, third day, she jumped up. That's what I'm looking for. Maybe pizza. Just covered call, got it. I wanted to make sure I'm still new to options. Okay, not wrong with that, pizza. Okay, 3A Ghost. Now, do you want to look at Coke, C-O-K-E, or do you want to look at Coca-Cola, K-O? You got to be more specific. C-O-K-E is most likely going to be a no, but that's okay. Dive Bandit. Do I like pot? Yeah, I got pans too. Trump threatened Apple with a 25% tariff if they don't build in the U.S. Well, it makes sense. Warren Buffett is cycling out of Apple. Okay, it makes sense too. Okay, 3A, you want to look at Coca-Cola. There's a difference between the two. Okay, there is. Thoughts on JEPQ, we already did that. Okay. Grozdanin, covered puts, no. Can you do Spire? No. Okay, Grozdanin. When I say 2 decades of consistent profitability, okay, you need to check out SPY and check out the dividends in which they pay out. SPY is a no. Okay, DJ Fresh. If you sell covered calls and the stock goes up, don't you lose money when you roll them forward? No, you do not. Grozdan, when you roll, how much do you lose or allowed to lose? I don't lose anything. Okay, Drew, what do you mean by rolling forward? You're new here. Okay, what is the reason for rolling forward? To keep from losing. When do I sleep? I'll get plenty of sleep when I'm dead. Can you use one stock only? Yes, you can, but you should always have, what's that word? Diversification. Okay, I made a big mistake putting all money into one stock once, and I lost a ton of money. Yeah, I'll never do that again. Lowe's versus Home Depot. HDLOW. We'll take a gander at it. Okay, Blake, can you discuss the highest risk points of your strategy and how you mitigate it? You seemed a little worried last week when the stock ran up and looked like it was going to close in the money. PPG, it fits your criteria of 2 decades. Yeah, average trader. I love PPG. It's on my list. PPG. So, Blake, you want me to discuss the points of the strategy that are at risk? Hitting the wrong button. That's it. Selling instead of buying. Buying instead of selling. Okay, hitting the wrong button. Panicking and selling. If the stock drops, are you going to panic and sell? That's where most people lose money. Okay, that's why I say if you buy something, never ever sell at a loss. Rule 1, never buy something you don't want to hold on for the rest of your life. Rule 2, never sell at a loss. That's where people always panic and sell. PPG, it fits. Yep. FICO, maybe FICO. What the heck is FICO? I know what FICO is, but I don't think it's a stock, and I don't know why you want us to look at FICO. FICO. All right, so next. Yeah, UNH, it's on the list. Ford is on the list. IWM, what the hell is that? IWM. Okay, Grazdanin. You sold a call for cheap. Stock moved up. Now your call is not zero, but expensive. You roll. It's okay. Grazdanin, it's always going to be about the numbers. Okay? What did I pay for the stock? What strike price did I sell? What's it at now? What is the best strategy for me to, number 1, have some money coming in, and number 2, not take any losses? Okay, it's one or the other. Okay, Pierre loves Ford. Good. NBIS. NEMA? NBIS? NBIS? What the heck is that? NBIS. X. US Steel. I love US Steel. C-Dub. What's happening? Can you explain how you don't lose? Is it because the underlying goes up? Okay, DJ Fresh. DJ Fresh, let me see if I can explain this in simple terms. Okay? You buy a stock, you sell a stock. You buy an option, you sell an option. Before you buy, before you sell, you have to make the conscious decision to do something. So let's say, hypothetically, I buy US Steel at 41 bucks. Now let's say, hypothetically, US Steel drops down to $22. So did I lose any money? No. You never lose money and you never make money until you agree to do so. If I bought US Steel at 41 and it drops down to 22, if I sell it at 22, then I have agreed to sell it at a loss. If I refuse to sell it at a loss, I'll just hold on to it. US Steel's been around for over 100 years. What makes me think that it's going to go out of business? Well, if I think it's going to go out of business, well, I wouldn't have bought it in the first place. Buy something, there is the chance that it could drop 50, 60, 70%. Okay, as we progress, you will sell it? No. I sold a covered call at 23. I made a nice little profit every single week ever since I bought Harley Davidson. Every single week I made money off of it. Okay, never sell at a loss. Okay, can you explain how you don't lose? Oh, I just did that. Many, at what percentage are you profitable? I am profitable at 0.000001. If I bought something for $100 and I sell it for 101 penny, I made a profit. Profit is profit no matter how you look at it. I look for 1%. So $100 stock, I'm looking to get $1. $1,000 stock, I'm looking to get $10. Okay? Also, when do you exit a stock? Preferably never. Monday, Tuesday only, usually. Or Thursday, Friday. Well, I usually buy on Monday and Tuesday. Friday's when I usually roll. Please explain rolling. Grazdenim. Rolling, simple. Hold on that thought. Hold on to that thought for 1 second. Okay. You see this here? It says M for Macy's. So I'm going to right click on Macy's. The fourth entry down, create a rolling order. It automatically creates the rolling order for me. I will then click on it, and when I click on it, this is what pops up. Well, I got 7,000 shares at $14.34. That's what I own it at. Okay? The current price for it right now is $11.65. Well, yes, I'm a little bit under what I paid for it. However, I'm going to buy back the 950s I sold for the 30th of May. See, 30 May. I'm going to buy back this one, and then I'm going to sell this one. 6th June, the exact same strike price, exact same call, and this one says a debit of 7 cents, which means I got to pay 7 cents here. No, I ain't going to do that. So I'm going to change 6 June to 13 June. 1 cent credit. I don't like that one either. So I'm going to go out to the 20th of June. 3 cent credit. All right, I'm going to go back to 6th of June, and then I'm going to change this from 950 to 850. Well, now I'm getting a dollar credit. See that? I can change any one of these things I want, and it changes the outcome. Okay, so rolling forward, I'm buying back the one that's getting ready to expire, and then I sell another one. Well, the one I sell next is going to decide how much money am I making and how far out am I pushing it. Well, the 6th of June is only one more week. So I don't mind pushing it out one more week to get $1.07 a share. Well, $1.07 a share on 5,000 shares, well, that's a nice little payday. Am I selling my stock? No. Am I losing any money? No. All I'm doing is I'm rolling it forward 1 week, getting me more time the week, because I'm changing it from the 30th, which is next Friday, to the 6th, which is the Friday after. Okay, so rolling forward is just another strategy to keep from losing money and to bring more money in. Hope that worked out for you. Let's get back to our trading so that we can see what's going on. Alrighty, pumpkin. Alright, well, let's do this. Next on our list, Fannie Mae and Freddie Mac, both on fire as well. Okay, fine. I bought it at 39. I have no idea what that means. I have no idea where we are. Austin, how are you doing today? All right, VOO. Oh, hell no. John, seriously. I'm back. Everything calming down? No, not at all. I think NBIS is a spin-off of Yandex. What the heck is NBIS? What the heck is NBIS? NBIZ. Okay, so anytime I do this, put a stock symbol in, and I get this right up here, well, that means they can't find the symbol. Then why are we looking at it? Next. Bags are great. I love holding on to many bags for years. Okay, I have no idea what bags means other than what they actually mean. Haphazard. I respect what you're doing, and my strategy is similar. Keep doing what you're doing. Well, thank you. Tumbleweed. What were the 5 investments you focused on? Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list. Or do you normally do long-dated options every 7 days? Alex, Monday, I buy my stock, and I sell the option for this Friday every single week. Week after week after week after week. Okay, haphazard, no offense, but Macy's is a dead stock. Retail is at best level. Okay, I'll appreciate that. Mid-June, UPS is closing 200 buildings. Wonderful. Not quite sure what it has to do with the stock, but okay. Dive Bandit, sorry. Can you explain options? Oh my God. Broncorp, hold that thought. NBIS. Oh, NIBS. NBIS. Okay. Nebius Corp. Never heard of them. NBIS. Okay. Now, I always tell people you need at your fingertips access to a financial website. I use Yahoo Finance. You guys can use whatever you want. Nubius or Nebius, whatever the hell it is. It has no dividends. Okay? Dividend forward and yield, nothing. EX dividend date, nothing. That's why I don't do NBIS. Getting a job in the finance world, worth it if I know a good strategy. I'm 20, no college, just knowledge. Cool. I like that phrase. No college, just knowledge. Big buck Wall Street. I'm an option trader for 5 years. Last year was my profitable year. Okay. I think I only made 73% last year. They are $90 billion in green, scaling and automation. Teamsters contract ends in 3 years. Okay, I get it. Doesn't mean anything unless the numbers work. I used to be Yandex, which was a Russian company. Oh, cool beans. NEE, that's Nextera. Hey, B-Rad Daddy, what's happening? Nextera, NEE. All right, no more questions. Let's stop the questions. Why use Yahoo when you have Schwab? Don't they give you all the finance data? No, they do not. That's why, Heidi, I always tell people, if you are going to trade, you need access to a financial website to answer the questions in which whatever trading platform you're using doesn't answer. Okay, so I'm going to stop the questions. No more questions. Let's look at the stocks we have on the list. And we've got at least 20. So let's see them. Okay, let's see what you guys think. Now, all this here, you guys asked me. Most of them aren't on my list. And there's a reason why they're not on my list, because I only like companies that are 20 years profitable, which means consistently increasing their dividends, and weekly options. Okay? Nike is on my list. First on the list, UNH. Not on my list, I'll tell you that much. UNH, University of New Hampshire. Here we go. Hell no. You see that? That was quick, wasn't it? High, low is, look at the motion. Up, sideways, down, up, down. Okay, so let's zoom into that down thing. You can see what that looks like. Okay, here you go. Here's the high. It drops. Here's your bottom. It went up 3 days, and now it's coming back down again. Not quite done coming down. So, note to UNH. CME. Nope. 2 reasons. Number 1, I don't do. Next. NDLS. Never heard of it. NDLS. Noodles. Yeah, hell no. Okay? Monthly. No, no, no. Rule number 4. Weekly options only. I love the way people listen. And 74 cents a share. How can you get 20 years of increased dividends with a company that's at 74 cents? Can't happen. IONQ. Trent, did you really ask me about that? Trent, do me a favor. Okay? Go whatever financial website you use. Look up long. What the hell is he saying? It's not INOQ. All right, whatever. I have no idea what he wrote. All right, no to noodles. What the hell, noodles. UPS, here it comes. Somebody want to look at UPS. Okay, not this week. Okay. High, low is, look at this. Up, down, sideways, down, up, down, sideways, 95.37. Let's zoom into that a little closer right here where it is at the moment. See, 30-day bottom here, 30-day top. Now she's coming down, looking for a new bottom. So I'm going to put UPS for next week to see if we can find the bottom. Because you got to remember, when a stock hits a bottom, it usually turns around and goes back up until it's done. Once it's done at the top, profit taking brings it back down. Well, we're not done with profit taking yet, so it's still coming down. So we'll be looking at it throughout the week. Next, Suncor, SU. Suncor Energy. Interesting. It looks interesting. Look at it. High, low is. Look at this. Sideways, down, up. Well, that was easy, right? But what do the numbers look like? 35.71. We'll look at the 36. The 36 is going from 35 to 45. Okay, might get our 1% out of that. A year ago, Suncor's at 40.74. High of the year, end of August, 42. Well, the bottom was just recently. Look at your bottom right here. Right, a little bit lower than 31. Up, down, up, down. Now she's going back up again. 1 day to the upside. Okay? Down, up, down, up. Okay, so we got 1 day to the upside. Suncor could be. Could be. So just something we'll look at during the week. Next, Riley. Ooh, now I do have a bunch of Riley, and I think I did say that. Riley. Okay, R-I-L-Y. Love me some Riley. What is that, 297? Something like that. 294. I was close. Okay, so this is one of them. I tell people, you want to get uncomfortable, look at this thing. A year ago, we're at 32 bucks. What are we at now? $2.95. Can you imagine it? Buying a stock for 32 bucks, and now it's at below 3. That's over 90% decrease. And why do I buy it? Well, because look at what it's doing lately. Going sideways. I love when things go sideways, and it's only 3 bucks. And it makes me a nice little profit every single week. Isn't that weird? All right, so let's take a look. Okay. Not quite a great time to jump into Riley. Okay, here's your bottom over here. I think it was like 270. Then she jumped all the way up to almost 4 bucks. Drops down, back up, back down. Okay, again, looking for a bottom for Riley. Now, I already own Riley. Okay, fine. Well, I got it at 5 bucks in one account. I have it at 3 bucks in another account. And a couple other somewhere in between. All right, so next on the list, General Electric. Ooh, gotta love some General Electric. Over 100 years old. Nope. Wasn't that quick? Look at that. Nope. It's too close to the high. Look at all that space there. Yeah, no thank you. I don't buy at the high. It just doesn't make any sense. I mean, think about it. Don't get me wrong. I love General Electric. Here's the bottom here. I would have jumped in 1 day, 2 days, 3 days, right there. That's where I would have jumped in. Because bottom, 2 days of the upside. On the third day, if the third day is higher, yeah, I'll jump in. So right about there. And take it for. I probably wouldn't have taken it all the way up. Because I take a profit. Go on, next one. So I will look at one company, grab the profits, and then I'll go to another company. I don't keep it for long. Longest I've ever held anything is 9 months. And I've been trading for over 20 years. 9 months is the longest I've held anything. Next. Am I reading that right? LAX? Isn't that like the code symbol for Los Angeles? So LAX is a no. MRK. Ooh, I like MRK. I actually own some MRK. And it's a nice time to buy. Do you see that? Look at this right here. That looks awesome. The high, low, where was it? Where's it? Look at the motion. Sideways down, sideways down, sideways down, up, down, sideways. Okay, here's the bottom here a couple of weeks ago, and she's jumping up. Wait till we zoom into that, because that looks freaking awesome. But before we do the numbers make sense? What am I buying it for? What am I selling it for? Am I going to collect 1% or more? Great. Let's check it out. Okay, it's currently at 77.58. The 78s are going for 119. That's over 1%. Great. It looks fine. Well, now let's take a deeper dive into the chart. What's the chart telling me? Okay, so last year we're about 127. The high of the year, 135, and that was the end of June. Well, she kept on dropping. Look at the last 90 days, last 3 months. Okay, here's the last 3 months. High, low, was, is. Look at the motion. Up, down, up, down. Now she's going up. Okay, I'm looking for a pattern. There's the pattern. Look, up, down, up, down. Now she's going back up again. That's the pattern. Okay, let's zoom into the 30 days to get even closer, because the 30-day chart gives me an idea. It's not guaranteed, but it gives me an idea of where do I think it's going to go by this coming Friday. Okay, so the question is, do I like Merck? Well, yeah, I do. Do I like Merck at this price? Well, yeah, I do, because I already own some of it. Okay, why else would I buy it? Look, here's the bottom of the year was 2 weeks ago. You can't get any lower than the low of the year. Well, there it is right there. That's the low of the year for Merck. Well, the question is, do you like MRK? Do you want to own it for the rest of your life? Because Merck pays a dividend, and the dividend consistently increases. Well, that makes sense. Well, what if I bought it, collected the dividend every 90 days, but every 7 days, or every Monday or Friday, whichever day you do it on, okay, you can collect a premium. Well, the premium here, okay, 78s are going for 119, and we're going to check into that, because this is definitely in a good position that I would think about buying some more. Okay, so anyway, last 30 days. Here's your last 30 days, and that gives you a better idea. Okay, up, here's the high, here's the bottom. Now she's going up again. Okay, fine. Well, let's check it out. Let's get out of this. Let's go to covered calls right there, the 78s right there, and one contract, just one. Okay, if you have enough money to buy 5, 10, 20, 30 contracts, hey, more power to you. Click that there, back to the market, and here it is. Buy one covered call MRK 100. That's the weekly. 30 May 25. That means the option is going to expire this coming Friday. The $78 call option against the Merck stock at the market to open. It's 2 trades. Stock option. My profit, 154. What is it costing me? 7,600. Well, this is better than the last trade we did. The last trade we did was 139. It was costing 10 grand. Well, this one's 154, and it's only costing 7,600. Now, you're not spending the money, you're investing money. You're buying an asset in which you can trade every single week to get a return every single week on this current asset. Well, this asset just so happens to be Merck. Oh, MRK, the Merck company. Merck and Company. All right, so calculator, here we go. Clear that. 154.50 is the profit. We're going to divide that by what it costs to do one contract. Well, one contract is 7,646. All right, 7,646. It comes to a grand total of 2%. You have any idea what 2% a week comes to? At 2% a week, you can double your money in 1 year, because 2% 52 times, because there's 52 weeks in a year, 2% every single week is over 100% for the year. Is it going to happen every single time? No. Do I get 2% all the time? No. A lot of weeks I do, but most of the time I get over 1%. But do I mind 2%? I don't mind 2%, especially with Merck. I love Merck. Merck is on my list. Now, this is not a tip. This is not me telling you anything. This is me acknowledging whoever came up with the Merck one. Okay, so I'm just reading what you, excuse me, what you guys are doing. Holy cow. All right, let's get out of that. Let's get out of that. Let's get out of this. Let's go back to here. Let's go back to here. And I want to write Merck down. MRK 2%. Okay, that's 2. All right. Next, Macy's. Someone just said Macy's is a dying stock. Macy's has been in business for over 100 years. I don't think they're going anywhere soon. I do have some Macy's. Okay? Here's the high of the year. Here's the low of the year. Look at the motion. Down, up, down, up, down, up, down. All right, so it's coming down at the moment. Now, I remember last year, Macy's was selling in the 20s, the early 20s. They had an offer on the table, and Macy's said, nope, we will buy back our own shares at $24 per share. Well, that's what they said last year. Well, what are they saying this year? Last year, the stock was around 22. Okay, we were trading at 22, 23. They came up with the offer at 24. Okay, well, let's look a little closer. Yeah. See, here's your bottom here. There's your top. Now she's coming down. Now, I'm going to put Macy's down for next week because we got to find a bottom, and it doesn't look like it's going to find a bottom anytime soon. MPW on my list also. Ooh, that's a no also. Next on the list, ooh, Wally World. Somebody want to take a look at Wally World, WMT. Ooh, interesting. Let's take a gander. The high, the low, where was it? Where is it? Look at this. Up, down, up, down. All right, well, let's zoom in a little bit closer and see why it's coming down at the moment. Here's your bottom, beginning of April. Shoots up, pulls back, back up, back down. Yep, not someplace I want to jump in at the moment. I like it when stocks find a bottom and then move up. Not coming down. No. Sorry. No, don't get me wrong. I do like Walmart. And I do buy Walmart often. Okay, so if Walmart, yeah, see right here? Where she jumped up and then she pulled back. And then she turned around and went back up again. Here's the bottom. 1, 2, 3. This is where I would have jumped in right there. I like 2 days. I like 2 days to the upside. On the third day, I will jump in. Scotty Cook, what's happening? Okay, next on the list, Colgate-Palmolive, Dividend King Extraordinaire, been in business for over 100 years. Look at that. That looks awesome. The high, the low, where was it? Look at this. Up, down, up, down, up. Cool. 92.59. The closest one's going to be the 93. The 93 is 60 cents a share. Sorry, as much as I like it, and I do like Colgate-Palmolive, I'm not going to buy something and sell it and not make a decent profit. Okay? 92.59. The closest strike price is going to be the 93, and it's only going for 60 cents a share. You're going to find that often on big companies, big ones. Johnson & Johnson, Colgate-Palmolive, Consolidated Edison. There's a few of them. You'll find, it looks great, but the numbers just don't look good. It's great. Now look at the chart. That's a great opportunity. Look, drops right here. It's bottom, retraces. Now it's going up. Great time to jump in, but it's not paying. So I'm going to pass on it because it's not paying enough. Now, don't feel bad. It's a good stock. But there are plenty out there. Remember we looked a little while ago at the beginning of the show? 10,046 different companies. Well, we're just saying no to this one. Let's find another one. Next. Oh, so somebody wanted to look at O Realty. So let's take a look at O Realty, and I'll tell you why I don't like it. Besides the obvious of it being a monthly optionable stock, which means I can only trade it once a month. So if I'm trading it once a month, making 1 to 2%, I can only do that 12 times a year. Well, 12 times a year comes to 12 to 24% a year. I would prefer 50 to 100% a year. Now, don't get me wrong. You may like O Realty. I don't. Let's tell you another reason why I don't like O Realty. Okay. O. Now, we're going to the statistics for O Realty. Okay. O Realty income. Forward, dividend, and yield. The yield for O Realty is 5.8%. We can call it 6%. So you're going to invest your money and you're going to get 6% return. Nothing wrong with that at all. As a matter of fact, I love it when people say they buy stocks and hold on to them and get 6%. I don't. Well, let me show you another reason why. So on this Yahoo Finance, one of the reasons I like it, I'm going to go here, historical data, and we're going to check out how wonderful O Realty has increased its dividends over the last 20 years. Because remember, I told you, I want 2 decades of consistent profitability. Okay, right now, O Realty's at $55.53. Okay, so here's the data right here. Okay, the date, the opening of the day, the high of the day, the low of the day, the close, the adjusted, and the volume. Okay, I want to look at just the dividends to see how consistently they've increased their profitability. Because if you understand what a dividend is a portion of the company's profits that they give back to the investors. Me and you. If you buy the stock, you are an investor. You own part of the company. You are entitled to a portion of their profits. Well, the portion of the profits that we're entitled to is called the dividend. Well, let's see how well O Realty has done in the last 20 years. So 20 years ago would be 2005. So let's go all the way back to 2005. And look, they do have dividends in 2005. Okay, well, let's see how they've increased them. Okay, 2005, January, 10.6, 10.6, 10.7, 10.7, 10.7, 11, 11.2, 11.2, 11.2, 11.2, 11.3, 11.4, 12.1, 12.2, 12.3, blah, 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 12, 12, 12, 13, 13, 13, 13, 13. Why aren't they going all higher? Wait a second. In 2007, it's 13. 2007, it's 13. So shouldn't 2008 be 14 or higher? No. 2007, it's 12. 2007 is 13. Right, 13. 2008 is 13. 2009 it's 13. 2010 it's 13. 2011 it goes to 14. It took 3 years to make a profit. So 2008, 2009, 2010, 2011, all 13. Didn't increase. Okay, anyway, let's keep on going. 2011, 14. 2012, 14. 2013, it jumped up to 17. So 2 years. So it went, 4 years, no increase? 3 years, no increase? So now we're at 2013. We're at 17. 2014, we're at 17. 2015, we're at 18. 2016, 19. 2017, 20. 2018, 21. 2019, 21, no increase. 2020, 22. 2021, 22, no increase. 2022, 24, 25, and 26. So this thing went 4 years without an increase. Then it went 3 years without an increase. So besides them not being consistently profitable, besides them only giving 5.7% per year, and then having a monthly option, which I'm not going to be able to trade every single week. So, really just doesn't fit for me. Okay, they're not consistently profitable every single year after year. So, no, I just don't like it. Next. Ooh, I like Johnson & Johnson. Oh, somebody asked me about SCHD. Holy cow. SCHD. Another company that's heavily marketed that doesn't work for me. It's at $25.89. Let's go. Wait a second. Look at this. This thing only goes back to 2012. Okay, so it goes back to 2012, which is not 20 years. So 12 to 25 is 13. It's only 13 years old. 13. That's a big difference at 20. All right, so look at the numbers. 2012, 4, 6, 8, 6. That went backwards. Did you see that? It was at 8 in 2012. Then 2013, it went to 6. That's going backwards. Then it went to 7, 8, 9, 10, 11, 8. So 2017, it's at 11. 2018, it's at 8. That's going backwards. Okay, 11, 14, 16, 15, backwards. 14, backwards. 20, 16, backwards. That's 6 times it went backwards. This thing's not even 15 years old. So no, SCHD is not consistently profitable. But hold on, SCHD gets a little worse. So let's go to the summary page. The summary page, you ready? Now the summary page is going to give me an idea of what the rate of return is for the year for SCHD. So we slide up here. There it is right there. The yield, 4%. So SCHD is making 4% a year. And you think it's good. I don't know who did it. Oh, John, VOO. Okay, so John wants to look at VOO. It's going to be almost the exact same. So let's go back to historical data. This is for you, John. We're going to look at VOO. VOO. Okay, hold up. Take a look. This is probably something you never looked at. Vanguard S&P 500 ETF. $532 per share. Okay, so let's take a look at historical prices. Okay, the date, the open, the high, the low, the close, the volume, all that kind of nice, neat, fun stuff. Let's take a look at just the dividends. How consistently has VOO increased its dividends over the last 20 years? Well, let's check it out. VOO. Wait. It only goes back to 2010. Dude, that's only 15 years. You're 5 years short. But hold on. It gets worse. Okay, let's check it out. 55 to 52. That's backwards. Once. Backwards. 53, 57, 58, 68, 57. That's backwards twice. 64, 68, 94, 67. That's 3 times. 73, 78, 91, 77. That's 4 times. 80, 87, 98, 90. That's 5 times. 95, 109, 100. That's 6. 95. That's 7. 88. That's 8. 129, 99. That's 9. 101, 117, 118, 108. There's 10. 115, 120, 128, 145, 138. There's 11. This thing keeps going up and down. 1 step forward, 2 steps back. 3 steps forward, 2 steps back. Okay, why are you buying a company that's not consistently profitable? Consistency of profitability should be 10, 11, 15, 18, 73, 102. higher and higher and higher. Not up, down, not 117, 118. That's higher. Now, 118 to 108, well, that's lower. 115, that's higher. 120, that's higher. 128, that's higher. 145, that's higher. 138, that's lower. 130, that's lower. Higher, lower, higher, low. No. Consistency of profitability should look something, wait a second, like this. Something like this. 16, 20, 23, 28, 31, 36, 39, 42, 46, 51, 56, 62, 68, 75, 83. Higher and higher and higher, year after year after year. That's called consistency of profitability. It boggles my mind that people don't look at what it is they're buying. Why would you buy some of these companies? Don't you look at the numbers? Don't you see, are they consistently profitable or are they not? Okay, let's next. Next, where's my pencil? Right there, here we go. Oracle, ooh, I like Oracle. It is on my list. Let's get out of this. But wait a second, let's check out VOO. Somebody wanted to take a look at that one. I just like taking a look at this. It boggles my mind. The summary for VOO. Are you ready? How consistently profitable? Not very much, but you look at this. Okay, who came up with VOO? Take a look at this right here. The yield, 1.37. Now, 1.37 is not like for a week. It's not a month. It's not a quarter. It's 1.37 for the year. You're paying $532 per share to make 1.37%. Explain to me. Who said this one? John. John, explain to me in a manner which I will understand why you think 1.37% is a good idea. I'm curious. I mean, give me a good answer. Why do you think spending $532 per share is good for 1.37%? It boggles my mind. Remember rule number 3? Rule number 3, make sure the company is consistently profitable. I don't consider 1.37% consistently profitable. And we looked at the dividends. It's not. Why are you investing your money in a company that's not consistently profitable? It boggles my mind. It really does. Next. Oh, shit, it's 11:30. Holy crap, we're done. I'm just going to answer the questions. No more stocks. Just going to answer the questions. So let's do this. I was losing track of time. NBiz. We have to take that like that was a no. I used to be Yander, which was a Russian company. Cool beans. Let's trade bikinis. Wonderful idea. I think Yahoo is easy to use. Okay. Blake, please talk about what you do to mitigate risk. Okay, Blake, to mitigate risk, I look at it every day. 5 to 10 minutes every day. What did I buy it for? What strike price did I sell? What's it at now? Am I at risk? What should I do? Every day. Monday, Tuesday, Wednesday, Thursday, Friday. That's what I do. All right. You said a bad word. I'm telling Daddy and Mama. JC7. Okay, you tell Daddy and Mama that one. Hello, why is Macy's done so bad this year? Thanks. Cato down also. Okay, got it. Oh, the millionaire. Well, hello, millionaire. Is it worth the dividend? I don't vest for dividends. Plus covered calls. Well, I love covered calls on Macy's. DX, best REIT stock. Monthly div. Said hi. Look at DX, please. Okay, millionaire DX. I'm totally clueless of who the hell DX is. Now I've been trading for a while. DX. Dynex Capital REIT. Hell no. There's your answer. Okay? Dynex, monthly. I don't do monthlies. They're apps. They don't work for me. If I can't make money every single week, why am I looking at it? I don't do monthly options. See? 20 June, 18 July, 19 September, 19 December. Those are months. It does not have weekly options. Did you look at FICO? What the hell is FICO? FICO. Fair Isaac. That's a no also. Okay? 20 June, 18 July, 15 August. Those are months. That's a no. There's your answer. No, no, and no. Okay, Eric, Johnson & Johnson. We'll have to look at it tomorrow. Nico Temp, how are you today? Furniture Co., good evening. Bully, Toast. Holy cow. Broken English, 12, 100%, thank you. Eric, Bitto. Bitto has not been around 20 years. Supermain Freem, I have no idea what that means. Broken English, no idea what that means. JFE, I have no idea what's that. Bitto, no. 10.6, yep. Pfizer, ooh, Kate, I love Pfizer. It's not on the list. Republican political views. Jen, I don't do politics. Don't drag me into it, please. Thank you. Broken English, how you doing? Eric, Bitto, no. Eric, Johnson & Johnson. I love Johnson & Johnson. We'll look at it tomorrow. Broken English, 960 hours. I have no idea what that means. 8 months start with. No idea what that means. 10 hours a day. Don't know what that is. Eric, Bitto, Johnson & Johnson. Okay. Okay, got it. Good. Okay, I am not get a dime. I have no idea what that means. Sylvia, good evening. Brooklyn, Nike. We'll take a look at that one tomorrow. NKE. We've got about 10 stocks to look at tomorrow. Broken English. Oh, no, it's penny. Oh, no, it's cents, dollars, blah, blah, blah. Bye. Okay, bye. Have a good day. Cassis. Kirk, how are you? You're going to comment on what weekly options? Okay, Born Corb? No idea what you mean by that. You were going to comment on what weekly options? Heidi, good evening. Get some sleep. I'll get plenty of sleep when I'm dead. Just another account. TSW. What the heck is TSW? I have no idea what that one is. Johnny Boy. Are you considered a day trader then? No, I am not. I'm considered as a swing trader. What about Starbucks? Ooh, whoa, I love Starbucks. Bucky's. We'll take a look at that one tomorrow. Dive Bandit, how did you build this kind of resilience? I could just listen all day because this is exactly how I talk to people around me and they say I'm crazy. You know what, Dive Bandit? You can go into a room of 50 people and you will get 50 different interpretations of what those people think of you. So you just got to get to a certain point where it's like, you can think whatever you want of me. You can. It's your freedom to do whatever you want to do. Everyone's going to have their own opinions. Okay? Opinions are like armpits. Everyone has them and they usually stink. Just my opinion. Isn't that weird? How often do you make trades in the week? It always depends on what's going on. Okay? Now King Zeke, cool name. King Zeke, I trade every day. I'm online every day. Now, I don't trade every day, but I do look at my account every single day. Monday, I do most of my buying and selling. Well, today's Monday. The market's not open, so it'll be tomorrow. I will do most of my buying and selling tomorrow. Wednesday, Thursday, I just basically look at my positions and see where they are. What did I buy? What did I buy it at? What's the current price? What strike price did I sell? Am I at risk of losing? If so, what can I do to not lose? That's number one, not lose. And number two, bring in some kind of money every single week. Now, I share all my trades. Okay, we're a little bit past 11:30. Maybe tomorrow I'll show you my trades. I share them every single week. So you can see everything I do every single week. Now, I have a morning trading group. And people do follow everything that I do. And I explain everything I do in that group. Thank you, King Zeke. Now, for the rest of you, I will see you guys tomorrow because it is Monday night. And tomorrow the market's open. And we'll see what happens for the next week. Okay, got that. All right, so we're done. I answered all the questions. Everybody's done. Great. So over here, you guys have a great night, and we'll see you tomorrow morning. And the meeting, all righty. And you guys over here on this Yahoo YouTube station, you are done. You guys over here on Instagram, you guys are done. And you guys, James Dupree, have a good one. Okay, so you guys here on TikTok, have a great night, and I'll see you tomorrow. Because guess what? The sun will come out tomorrow. Wipe away the cobwebs. So tomorrow night, you guys are doing the exact same thing every night, 9 p.m. Looking for a safe, predictable, consistent 1% per week, using nothing but pre-qualified dividend stocks. And those, my friends, are companies that have consistently increased their profits every single year. Why would you ever buy a company that's not profitable? That boggles my mind. Okay? Don't give up your day job. My day job, thank you. What's the best Vista? Okay, I can't tell you that one, Daniel. You look marvelous. Well, thank you. Okay, Jay Moore. I don't have a day job. Retirement is fun. You should try it. You guys have a great night, and we'll see you again tomorrow. Some of you guys, I'll see you in the morning. And now, and you guys over here have a lovely night, and this over here have a great night, and there, and done, and there.